Welcome back. Every week, I scan the entire stock market to find the best value trades available right now on eToro. Picks you can start with as little as $100. No hype, no complex strategies, just smart, small investments for everyday people. Let's get into this week's picks. What's going on, everyone? And welcome back to the channel. If you're new here, every single week I go through the entire stock market, dig through the noise, and pull out the trades I think offer the best value right now on eToro. The best part? You don't need thousands to get started. Every pick I cover can be bought for $100 or less. So whether you're a complete beginner or just want to start small and grow smart, this channel is for you. So if that sounds good, make sure you hit subscribe and let's get into this week's top picks.
Here are some common themes and asset classes often considered for long-term investment. 1. Diversified portfolios. ETFs, exchange-traded funds. These are popular for long-term investors because they offer instant diversification across various assets, sectors, or even entire markets. Broad market ETFs, funds that track major indices like the S&P 500, for example, SPY, IVV, VOO, or global markets like VT, are often considered cornerstones of a long-term portfolio. They provide exposure to hundreds or thousands of companies, reducing individual company risk. Sector-specific ETFs for those who believe in the long-term growth of certain industries, for example, technology, healthcare, renewable energy. Sector ETFs can offer focused diversification. Mutual funds, similar to ETFs in offering diversification, but typically actively managed, which can mean higher fees and traded once a day. High-quality blue-chip stocks. These are shares of large, well-established companies with a long history of stable earnings, reliable dividends, and strong market positions. Examples often cited companies like Apple, Microsoft, Johnson & Johnson, Coca-Cola, Procter & Gamble, or Visa. They tend to be less volatile than smaller companies and can weather economic downturns better. Dividend-paying stocks. Companies that consistently pay dividends can provide a regular income stream that can be reinvested to compound returns over time. Dividend aristocrats or kings. These are companies with a long track record, 25 plus or 50 plus years respectively, of increasing their dividends annually. They often represent financially sound businesses. Growth stocks with caution and for diversification. These are companies expected to grow at an above-average rate compared to the overall market. They often reinvest most of their earnings back into the business, so they might not pay dividends. Examples: many technology companies fall into this category. While they offer high potential returns, they also come with higher risk and volatility. For long-term, investors look for companies with sustainable competitive advantages and large addressable markets. Real estate via REITs. REITs are companies that own, operate, or finance income-producing real estate. They allow investors to invest in real estate without physically owning properties, offering diversification and often strong dividends. Commodities with caution and for diversification. Gold or silver, often seen as a store of value and a hedge against inflation or economic uncertainty. Other commodities, oil, agricultural products, they can be invested in via ETFs, but they tend to be more volatile and are often used for diversification rather than core long-term growth. What to consider for long-term investing? Time horizon. Long-term usually means 5+ years, often 10, 20, or even 30+ years. The longer your horizon, the more time your investments have to recover from downturns and compound. Risk tolerance. How comfortable are you with the potential for your investment value to fluctuate? Younger investors often have higher risk tolerance as they have more time to recover from losses. Diversification. Don't put all your eggs in one basket. Spread your investments across different asset classes, sectors, and geographies. Cost and fees. Be mindful of trading fees, management fees for ETFs or funds, and eToro-specific fees, example, overnight fees, withdrawal fees. High fees can eat into long-term returns. Regular contributions. Dollar cost averaging by investing a fixed amount regularly, for example monthly, can smooth out market fluctuations and is a powerful long-term strategy. Research. Understand what you're investing in. Look at company financials, competitive landscape, growth prospects, and management quality. Rebalancing. Periodically adjust your portfolio back to your desired asset allocation as market movements can shift its composition. Remember that past performance is not indicative of future results. The best long-term strategy is one that you understand, are comfortable with, and can stick to consistently over time. To give you a better idea of what these different investment types might look like conceptually, I can generate an image. Would you like to see a visual representing different long-term investment categories?